Good morning again. My name is Andreas Löcher, based in Hamburg, Germany, with Union Investment Real Estate. We are open-ended fund and provide funds under retail and for retail and also institutional investors. And we are widespread. We've got like 15, 16 different funds and one dedicated fund only investing into hotel real estate. With regards to hotel, we've been growing tremendously during the last years and are at the moment at an entire number of 77 hotels, majorly located in Europe, but also have been initiating investments in the US the last 3.5 years, where we now own 7 hotels. Actually, Romain, all lease agreements. We may have a chat about that later on. We're actually regulated by law. We can only do lease agreements, so therefore we just simply can't do management agreements. We still need to understand lease agreements and the operations and of the hotels and very deeply look into that. But maybe we can have a chat discussion about that later on. Yeah, want to pass over to Alexandre?
Yeah.
Yes, you each
I'll
have
take
one.
mine.
So.
Hello, my name is Alexandre Couturier. I'm a lawyer. I'm a partner with Clifford. Some of you might know that firm. Before that, I was already a lawyer with other firms, including Freshfields and King and Spalding. I've been working with Andreas on a transaction a few years back, and I've been working for Union Investment for a long time. I'm a real estate lawyer, so I don't do just real estate, and I don't view the hotel industry as purely real estate. There's more to it, and our firm actually has a dedicated hospitality sector, which is not only real estate lawyers but also corporate lawyers and finance lawyers, etc., etc. And I do about, at least on average, let's say 3 or 4 hotel transactions each year. I have to say a lot of them, because of our client base, are lease-based, but not all. We do management agreements. We do, and because I focus in France, we do more and more franchise agreements. We do, and I see more of that, cluster and portfolio transactions, whereas it used to be a lot of single asset transactions. And I think there's also very interesting trends to be discussed. Maybe we have a time to touch base on this, on how the industry is changing, and the new trends around co-living, around the new hotel products, the unlabeled, and all these new trends that I think are clearly redealing the cards.
Asli.
Hi, Andreas, I agree. I'm glad this is not in French, because some of you were here a couple of months ago when I was terribly participating in the Deloitte conference trying to speak French on a panel there. So I'm really glad that you guys are going to understand more this time what I'm talking about. I hope. I don't know. Yeah, I'm Asli, and I'm in charge of the development and growth of Cycas Hospitality. We are entering in our 11th year, and I've been with the company about 9-10 years of this growth. When I joined, we had 1 hotel, and I'm today very happy to say that we have 24 hotels, just short of 4,000 rooms, as a very unique pan-European independent hotel operator or white label. Within this portfolio of 24 hotels, we are working with 11 different brands that comes under 4 hotel companies. And we are operating currently in the UK, France, Benelux, and Germany. Hopefully, our ambition is to go into our teenage years, which is in about 2 years' time, to reach 10,000 rooms across these key markets as a white label operator. And our modus operandi is that we are a hotel manager. That's our DNA. That's why we exist. And that's why we do every day what we do. However, of course, given the different landscapes across investments and appetites across Europe, we do have majority of our contracts are hotel management agreements, great, but also we do have leases with the institutional investors who cannot hold obviously management agreements. And we also own 2 of our properties, although ideally we don't want to hold any assets because we're not real estate guys. We want to trying to be more asset light and focus on operations, but we do own too. So we know all the pains and of being an owner of an asset and the downturns and upturns. But nevertheless, currently we are also negotiating a very different type of contract, which is quite unique to France, and it's called location gérance. So that's basically leasing the fond de commerce, the going concern of the property, which kind of a hybrid between what Rohan was kind of advocating earlier on. We take all the liabilities of the employees and etc., but the real estates and all the things that are relating to the real estate stays with the owner. Anyway, so these are very interesting times for us as Cycas, and I think across everybody else as well. And for France, we are currently 3 hotels. And about to sign, hopefully, where's Arthur? 5 more this year? Thank you. Yeah. So we're very actively growing in France. Thank you.
Super. Romain.
So, I'm Romain. I'm heading the transaction department at GLL Hotels and Hospitality in France. So together with Gwenola Donnet. Gwenola is heading the advisory. Don't know if you know her. So if you look for an operator, if you look for a feasibility, if you look any advice, you go to Gwenola. If you want to buy or sell property or portfolio, that would be with me. So my background is institutional. I was with Amundi Asset Management before. I also managed a company called Christian Co. for a little while. But I've spent some time with Amundi, and I'm pretty familiar because with the management contracts and all the hybrid contracts, because I was in charge of structuring and investing on their behalf on the hospitality sector, and we did together with the real estate team at Amundi, we acquired the Pullman Eiffel Tower with the management contract. So that was the first time for a French OPCI, so also very regulated by the IMF. But we found a solution to convince the IMF that we could do this without jeopardizing the capital of our shareholders, which are private individuals, as you may know. And prior to that, I was with Accor for a few years in the team in charge of disposals mostly. So executing the asset light strategy.
Great. So we've got a lot of different expertise that we can share this morning, and now everybody knows each other. There's no need to be polite anymore. We're all part of one family, so we can just get straight to it. So let's just have a little look. Andreas, maybe just pick up. There was a mention there from Alexandre of some of the trends. So let's look a little bit just at the trends that you're seeing across the market.
You mean from an investment perspective?
Yes.
In the first place, yeah. Yeah, well, we've been, of course, coming from Germany, we've been very strongly and heavily invested in Germany. So far, we're looking even more to invest into the country. Nonetheless, we see that yields have been strongly trading down during the last year. So therefore, to find right opportunity is quite of a challenge. We therefore do structure many deals under development. Actually, in Germany, only developments is the only possibility to grow. We've got a strong team on the development side which help us to facilitate these transactions. But in this context, we also would like to enhance our European business. You know, doing the US on one side, but Germany on the other side. We've been, doing some transactions outside of Germany in the last years, like in Austria or in Poland or in Holland. But we would like to again, particularly come back to France. We've not been active here in France for the last 5 years. The last one we did was the Meliá La Défense. And we would like really to grow here again. We understand that it's as difficult as it's in Germany, but now being at low levels in Germany, there is no reason why we just should only concentrate in Germany and Europe. Only we, together with Philip Kunz here in the first row, who is particularly concentrating on the European market, we would like to do more. Paris, of course, is top of the list. Barriers of entry are very high, so therefore we would be prepared again, as we did 5 years ago on the WEFA Meliá La Défense, do another VEFA transaction. So whenever you may have a great opportunity, please come approach me. We're happy to discuss and see if there'll be something which we could be realizing. Then, of course, we do think that also regional markets in France could be of interest to us. We regard there is also a strong growth even in the regional markets. We have at the moment a fund which is going to be set up, which has been concentrating on secondary locations on a European level, which means that we're going to look at secondary locations in Germany, where we are very active at the moment as well. But we also be happy to look at secondary locations, particularly now being here in Paris, also in France, and looking at we've heard about Romain, Nice. I'll take that as a good advice. Be happy to have a look at the market, but other markets which of course could be of interest to us as well. We've been looking at the UK. We'll see what Brexit is there. We've been new opinions on the investment market every week, driven by changed situations in UK governance. So we'll see what that takes it. But I would say there are still good opportunities on European level. But as said, we strongly and have a strong expertise in development, and that's actually probably the part where you can still identify the right opportunities. Yeah.
Okay, good. And Asli, maybe picking up with you, let's look at some of the other trends, because you're obviously looking as well at the trends in terms of what's happening with the potential guests. So what are you seeing in terms of those trends? How do you see that influencing also then the development side, and maybe how that plays a little bit into the investment side?
I think the biggest shift we are seeing from a customer perspective is the two key hotel types or stay occasions. One is that today, when we established Cycas 10, 11 years ago, and when we say we are going to be one of the largest extended stay hotel operator, everybody looked like we're aliens. We had to explain to investors and other operators and customers what extended stay means. Fast forward 10, 11 years, thanks to Airbnb, who also opened up the non-corporate customers' view on extended stay concept, and us really working very actively with Intercontinental and Marriott and Hyatt. Today, extended stay is becoming one of the mainstream hotel type for customers to choose for their stays, but also for the investor to invest, because they now don't see that as a creative asset class, but it's kind of a mainstream asset class. So that's one of the things we're very happy to see shift in the change from customer and the investor perspective. The other one we are working on is the lifestyle, because I think nobody wants to call budget these days. It's not a very nice word, but no, I think what happened in the market is that people, and especially the millennials and our generation, we are more and more moving away from these grand hotel rooms. People don't really want to have a room that is 30, 40 square meter with a very boring sitting area, because nobody likes to sit alone these days. So they all want to be part of a big happening things around themselves. So we're seeing the room sizes shrinking increasingly, and then the public areas expanding, not with the fine dining and all that fancy F&B, but just like really cafe and bistro atmosphere and sharing the area, which is obviously comes from the sharing economy growth within the cultures. So we are really much focusing on where we're seeing the optimum value of developing assets and managing assets, or where we can combine either have a lifestyle or have an extended stay, or best of both worlds, have a bit of each one of those. So we opened our Moxie and Residence Inn hotel combo double-decker or dual-branded, whatever you want to call it, in Amsterdam last year. It's now been exactly 1.5 years since we opened it, and it's just phenomenal. It's a really amazing concept that works incredibly well. First of all, from a customer point of view, it's really fits into today's travelers' needs, both of them. But more importantly, of course, we are here to make money. Happy customers mean is good money, but also profits are always relating to your operational model. And when you have a lifestyle brand that is very much staff efficient, and you have an extended stay, which is also very staff efficient, the conversion of this business model into your bottom line is phenomenal. So we are really pushing through the development pipeline for ourselves with our investors or as an operator and as a lease, these dual branded hotels. And the latest trend I'm aware of, and we are actually about to sign, is a lifestyle hotel with an extensive conference area and a co-working along with a student accommodation, all under one roof. Hopefully we'll be able to announce it in a couple of months' time. We're just going into the contract at the moment. But again, actually, when you look at it, the location is a very attractive location in Germany. And the local micro-demand drivers actually can support all these very 3 or 4 different lines of business under the same roof. But when you go through the whole numbers and the demand and what you're going to do, it's incredible. They actually complement each other a lot. So I think as a trend moving forward, we're going to see different combinations of co-living, co-working, extended stay hotel, lifestyle hotel, all these things under one roof, I think is quite very much around the corner, given that retail is about to die or shrink, and all these big buildings in key city centers that they do need different type of businesses to come in and revive. And I think all these very interesting trends based on a sharing economy is going to be affecting our industry and the trends.
Good, interesting. Having just launched a magazine called Living Retail, I may have to discuss that with you, Asli. But
I just published a blog this morning, actually, about retail and hotel, how the hotel can help.
Okay, good. Well, there's a lot of mixed use coming into retail centres, which is interesting. Alexandre, you mentioned that also you wanted to pick up that point a little bit about co-living, co-working, how those general trends were beginning to fit together.
We see pretty much what you just said, and it's very interesting. There is a because we're doing real estate ultimately. There's a limit, I think, which is that all you're talking about is consuming a huge amount of shared spaces, and not all the properties that we see on the market actually provide that shared space. So I am wondering, it's more a question rather than anything else for this group. I'm wondering to what extent these new trends can only be satisfied and accommodated in new properties and new developments, because what I tend to see is that, at least in Paris, where construction is heavily regulated and the legacy of what our Haussmannian buildings look like is very strong and is a constraint, I don't know to what extent we can accommodate that new trend of a huge need for shared spaces, and whether these trends can only be accommodated in new developments, new areas, and to some extent new cities. Now, we could always try and convert shopping centers.
Yeah, I think we're not going to see many of these happening in downtown locations. I think that it's just impossible, of course. But I think what we're going to see in the primary cities, I think, a conversion of the retail areas, and also old and outdated offices that people more and more start working from home bases, and we've talked about that office space is going to be more and more become available for alternative use. So we are pretty much focusing to convert those spaces that are no longer required to be a function under retail or office. You may still share it with them. So if the retail, for example, a 10,000 square meter retail, these days only going to need just 500 or 1,000 square meter, because all they're going to do is just a couple of computer screens and that's your shopping. And then the rest of the building, you can put whatever you want to do.
There's a question come in on Slido, so thank you for that. And the other thing to remember, which I forgot to say, is that if there's a question that comes in that you like, if you like it, I will know that somebody else has liked it, and then I will definitely ask it. But this one maybe for you. We'll focus quite a lot, I think, on the business side of things in terms of that. But the question was really about so ski resorts, seaside, that sort of leisure side. You mentioned their Nice. How much of that is playing a role, particularly in France, and also maybe a little bit across the continent as well, Romain?
Oh, we see a lot of private equity investing in Spain, Greece, Italy now, looking to invest in Greece, Italy, because their supply is very limited as well, and market is not very transparent, unfortunately. But we saw a lot. We saw, for instance, what's their name again? Batipar. Batipar took this angle. I think they are doing really nice deals, pretty high yields. They are refurbishing a Club Med in Sicily. You're thinking Club Med 10 years ago or 5 years ago, people were wondering what would happen. Look at their profitability now. You're thinking Sicily, wow, it's a complicated market, mafia and everything. They went there. They are pretty successful. They refurbished very nicely. They opened recently, and it's going to be a blast. And we see more and more. And we saw KKR doing this in Southern Europe. We're seeing Morgan Stanley doing this in Croatia, and they're all being pretty successful. So I think in France, if you look at France, you look at our supply right now. I mean, if you want to book your holidays in a club with a baby club or facilities for kids and services for kids in August, now you cannot find anything. If you look for something below 5,000 euros a week, you won't find anything. It's the same in Portugal. It's the same in Spain. There is no quality supply with a very nice service offering. So I think there is a play here to buy poorly maintained properties and refurbish and bring some services that people are expecting. Because people, they work a lot, they don't have much time to spend in their holidays, they just want to be taken care of, and they don't want to travel 15 hours to go to the Maldives in the middle of the summer. So I think there is a play here. If you look also at camping sites, it's completely booming. If you look at Vacalliance, they did a really nice sell and lease back, and Swiss Life bought their camping sites at a very expensive price. But and if you look at their EBITDA, it's like booming. So yeah, there is a play in the French regions, in the Alps and on the coastal areas, because you have a lot of properties that you can take over at pretty cheap price and improve a lot.
Okay, good. Andreas, I wanted to pick up with you just in terms of how you're investing across Europe, as you said. How do you see the markets that you're investing in comparison to the French markets? Are there particular differences, whether that's in terms of availability of product, access to the markets? How do you see those two when you compare them?
Yeah, that's a very good question. We of course are here also that we are enhancing this venue today, as we think it'll be important to get closer together also within our industry. We've somehow realized also coming from Germany that there are relatively high barriers of entry for us here in France. Also to get connected. There is of course a strong dominance by some few French operators like Accor or Louvre and B&B, and we'll be happy and pleased. So in order to, of course, get in touch with these companies and doing business both in Germany but also in France. But there are also new kids on the block here at the moment, like Moto1 who've just opened the first hotel in Porto, which I just heard from Clara, which is a great success. And also the other round, there are French brands which have been strongly expanding in Germany. We are well invested into Accor hotels in Germany, in Novotel, Sofitel. So we've got quite a good exposure with French operators. So talking about France and Germany, yes, would like to do more in France. We do understand, as said prior, the barriers of entry, new developments are very high in Paris. We understand that that there is, of course, a regulatory component to it. It's really, really difficult and time-consuming in realizing a deal. And also when we did the one in La Défense, it took like 4 or 5 years until we realized the transaction. That's probably one of the restricting factors. And if you look at the value per key, if you look at the very famous HVS tables, it's #1 Paris in Europe, and really ranging at very high levels, which has a good reason, because there is a great demand and a great future for the market, not only from domestic and European guests, but also for more people coming outside of Europe. There'll be even a high influx from China. The travelers from China will more than double until 2039, so there'll be a lot of many new guests coming into the market. Then, of course, we always need to talk in this context about the one factor which is important, and maybe another limited factor for getting new supply, which is so-called over-tourism. And some cities are struggling with over-tourism, like Barcelona or Amsterdam, but also maybe Paris, that there are strong and clear initiatives to somehow get over, or mass tourism to regulate that, maybe also to get tourism at a little bit more elevated level, and get a bit away from the really cheap traveling. And that's also a trend which we actually in Mallorca you can see the same thing, which I would regard as an important point, also in the light of sustainability, environment. That are topics which are really getting a top priority when it comes to both visitors but also, from our point of view, at the end of the day, which will be the markets where you have sustainable business and sustainable hotel developments in this context.
It was interesting. We were at Pravada last week, no, just the week before, and that was one of the topics that came up while I was doing an interview with the heads of Amsterdam, and they were very, very keen to be able to not actually have less visitors in a way visiting the overall region, but to be able to have those then in Utrecht, in sort of sub-areas around the city rather than just in the central city, so that was spread out across the region rather than just in the city centre. It'd be interesting just to pick up with you, Alexandre, in terms of the international investors, as well as Andreas, who you're seeing. How much is that access to the market an issue for them? Do you see that changing? And also, with obviously big development around Le Grand Paris and the Olympics coming, how much do you think that's going to influence development, but opportunities for international capital in this market?
The first one was about the Olympics and the Grand Paris. I think the Grand Paris is obviously going to bring a lot of development, and we're working on several funds, none that I know of dedicated to the hotel or hospitality industry, but still we're working on funds dedicated to Grand Paris development, and obviously some of that is going to cover hospitality. Now, the Olympic Games obviously is going to be full of opportunities. That said, the Olympics are going to last for a month, and a lot of what we have to think about is what comes next. So I don't know how and I know that London is a very good example for whoever is working on the Olympics in Paris of what we do after the Olympics, and it's probably even much more important than the Olympics themselves. We do see a lot of appetite in the residential area, obviously, and it's very likely that some of that will also move to the hospitality sector. Back to your first question, in terms of the investors and the trends that we see on the market, one thing that actually puzzled me in the presentation that Romain gave a bit earlier was how London and Paris are similar. Obviously, not in terms of breadth of the market, because London is twice as big as this market. But if you look at who is investing, the predominant importance of private equity investors is a common trend in Paris and London. I think these two markets probably share the same level of maturity, are the same development stage, and it is what we see every day in the transactions that we do, is that the yields are very attractive for those PE investors who have understood that the lease is pushing a lot of people, or the non-lease available is pushing a lot of people of the institutional money away from that market. And if you're willing to take the HMA risk and sometimes the franchise, then you've got yourself an opportunity. Also, it's still, if you rely on financing, and a lot of people still do, the question of employees is something that is driving lenders away from a lot of structures. So there is also space for these PE boutiques to actually decide that they're going to take on that risk, and they're going to do what needs to be done, separate the OpCo from the PropCo, and put in place the structure that needs to be put in place to be able to leverage in interesting conditions. Another thing that I have seen and I'd like to point out is the share that I think is relatively high of the domestic investors on our market. And if you think of players like Mata Capital and people like that who were virtually unknown 5 years ago and are starting, or 10 years ago, starting to build huge platforms with very interesting investment decisions, one by one, and creating clusters and creating platforms, I think that's a French trend that is there to last.
And that's quite, Asli, I think the cluster aspect of that as well, I think is quite interesting in terms of how you begin to develop in your strategy, isn't it? Am I right?
You're absolutely right.
Okay, yeah. That's good. I thought you were going to say no.
Look, you were talking about the entry barriers into France earlier on, and we discussed this before as well. I think the biggest thing that alienate most investors and operators has been the not the language, but more so the labor laws in France. And yes, it's different. Yes, it's tough. And yes, they are expensive. But it's not atomic science. And once you actually break down into smaller pieces about the real the regulation and legislations and trying to drive a strategy before coming into France, which we did, I think that entry barrier becomes, it doesn't disappear, but it becomes much easier to handle. And we tried and tested this approach of cluster, always originally in the UK, where we have a cluster of hotels. In London, we have a northern cluster across north of the UK. Now we have a Benelux cluster. And as a centralized operations and divided into regions and clusters, we're really creating a synergy among properties. And also, we are looking into not employing that many employees at the property level, but they become part of the cluster and our management company. And therefore, I think, yet to be seen, but we're circumnavigating around some of those issues of, obviously, in France especially, we're going to get around, hopefully, those issues. So we don't see that as a major issue. And currently, our French cluster is pretty much Paris and north of Paris and west of Paris. That's our first cluster already in place, and looking into moving a bit more south and hopefully, again, no pressure, Arthur, but with his help, we are moving into a southern France cluster after that, not too far from, probably by next year or middle of next year. So we do enjoy these clusters and information sharing, best practice sharing. And one of the other reasons I think we don't see this, the employment law as an issue, is that our ethos is to create hotels where people enjoy working as well as the guests staying. And that's a different mindset as a dedicated hotel manager. We really, everybody says this about look after your employees and they will look after your customers, and it's repeated in every single company. But those companies who put this in real practice actually benefits. And last year we won the best best hospitality company to work for in the UK and Ireland by the Caterer Award, which is a very knowledge, well-known company, award. So for us, these are the things that we're hopefully going to be bringing in as a white label operator or independent operator into France and trying to spread this across the French market. And what I always say is that the biggest opportunity for us here is the most of France, and especially in the regions, you had all the old generations who were hoteliers. They built their hotels. They had 2 or 3 or 5 of their own hotels, and they were not scared of hard work, so they managed their own hoteliers, so they were owner-operators. Now those families have their 3rd generation, which are millennials, and we all know they're not very keen on hard work. They're more keen on practical work, things they can do with their phones and computers, where our business is about dealing with people and running around buildings. So for us, for Cycas especially, it's the greatest opportunity here that we can come and relieve those families from their pain of who's going to manage my hotel, but we bring some fun management company into the mix and hopefully help France to change their approach into this hotel management.
Okay, Romain, well, you wanted to pick up on that?
Yeah, I just wanted to add something. I think there is a missing link on the French market, and I think Cycas is about to fill it and to become I think you really are the game changer on this market, because what I mentioned before is that you have these institutional players that they want, such as Union, they want a lease, and you have the operators that don't want to take leases. And I think Cycas is, as I said, the missing link, because they're ready to take leases. They are what we call the white label operator, meaning that they don't have their own brand. They are using other brands, international brands. So when you are a landlord, then you get to kind of it's what we call a sandwich lease. So it's like you have a lease with the operator, but you have someone in between that is taking care of the operations for you. So this someone is not yet a AAA tenant, but this will change. And the more institutional buyers believe in you, the more they feed you they will fuel your growth, the more AAA you will become, and the covenant will improve. And and I think that's something we didn't have in this market 5 years from now. This is really a game changer. I hope I know some hoteliers are now, French hoteliers are now trying to do that, to copy paste that. I know Mata Capital, for instance, with Dalmata Hospitality, they are trying also to do that. So there will be competition, but competition is good. So, and I really wish that institutional investors that own offices at the moment. Of course, if you look at the vacancy on the office segment, I mean, I think it's like 1.4% or something in Paris, and the rents are high. So they are like, why would I change the use of my building? But this will change, and it's good that we have people like you now that can help them do that.
Mm-hmm. Yeah, may I say a word on that? I entirely agree with Romain, and we have like white label operators in Germany. We're working with a number like 8 or 9 are really already authorized, so it's a very common model in Germany. And I think it's a very smart move of Cycas in getting into this market. And we've been actively deal structuring in that way also in the US. It's not like you're going with one. That's actually not the way how we're doing leases. It's a modern new concept lease you're doing. You're really structuring leases. You may have a management agreement behind. So that's how we did structures in the US, like with Oxford Capital from Boston, where we did like 3 transactions in the US. There are others where we've done that, and the same thing. I think it's actually a very smart way, and in order to grow with actually very very good concepts. Also, maybe we have a chat on that later on which segments which we're talking about, but particular limited service where you have, of course, in mind the relatively high cost block, particularly maybe here in France, which is very smart to get around that. And then at the end of the day, doing that and mix that with the real cool concept, with which you've mentioned prior, Asli, that'll be probably the a success combination which just flies. Yeah.
One thing I think just kind of helped us as well, just why we get to here in 10 years' time from 1 to 24 and hopefully 50 very soon, is that as a hotel manager, we always say that we share your pain to our owner and investors. And we didn't just say that in words, but we never, ever in our lifetime charged our owners any base fee. All of our fees to this date has been incentive fee. So we will take 0% from top line and something from the operating profit. And that was sort of our investment in partnership, and our equity into the hotels that we manage on behalf of other people is to be able to say, I'm only going to make money if you are making money. And we are in this together. And then combining that with the creative leases or location gérance and etc., I think we're in a good place, and hopefully we'll grow a bit faster. Yes.
Hi. And I was quite interested in the sandwich lease that you mentioned. Between different brands, if you like, or different types of, different types of products, if you like, within your sector, because you're also obviously taking sandwich leases as well, not pure.
Yeah.
I understand. Do you have different criteria for the kind of rent cover that you are, do you use that as a criteria for how you choose to do a lease?
Yeah, certainly we have a very strong approach to the rent cover and the asset test we do on our leases. Obviously, you don't take any lease less than 20, 25 years. So in that reason, we sometimes came across being the conservative lease taker. But on the other hand, we do in a creative hybrid leases where we figure out to find a way to give the upside to the landlord, and therefore that although we may have a very strict cover ratio, there is always an upside share in that scenario that we both benefit. The last thing I want to do is to, when we see the first little movement on the market, and hospitality gets damaged first, they get affected first, I don't want to hand over any of my keys. And quite frankly, whereas the market was still booming last year, I took over somebody else's keys because they signed one of those crazy leases. So we never want to be there. So we do have a very strict cover ratios and also indexes. We don't always follow the market norm on the indexation because I think if you go for 100% indexation, your hotel is never going to grow with the 100% of the economy, but your cost line going to grow with that, and your lease grows with that. Your delta becomes so dangerous in 7-8 years time. You may face some challenges.
So what is the rent cover that you look at? What is
every region different.
What's the range?
We know, Navneet, yours is very high.
I know.
Look, I think
So I'm always curious to know what others are doing because obviously it's a market, and I'm always harassed by my friend here who heads our development in France as to our criteria for entering the market is very high, so we can't do deals. So I'm always curious to know what other people are doing.
I think you have to look at it from two angles. Is the one, what is your cover ratio during the base case, which is today?
Yeah, base case.
And in the base case, in the cities, I can go as, if London or Paris, you have a little bit, more room to go down, but rule of thumb 1.4. But when you run your downside scenario, because, every lease you have to have one, or your asset test, on that one, we will never go below 1.1. So you have to look from two different cover ratios. One is what's on your base case, but also what could be on your downside, and then decide are you on the optimum level.
Regarding the cap, our friend Clifford Chance, I'm sure will concur, you cannot cap it any longer in France. It's too risky. You cannot do a tunnel on the cap any longer.
Well, there is still a case law about that.
Well, you can take the chance, but
Yeah.
you're taking a big chance
we are
because
currently doing that.
your lease can be void, can be nullified because of that. And just one more word on the white label. Actually, Union Investment pioneered this in France on the Marriott Champs-Élysées back in 2003. I sold the Marriott Champs-Élysées to Strategic Hotel Capital in 1998.
That's correct.
And in 2003, Union Invest bought it,
and had a special SPV that hold the fond commerce, and you got a lease.
That's right. Yeah, you have like already a natural structure with fond commerce and fond de mur, where you have different roles which could be also sold or handed over, and that's true. Yeah, we're already having that model in place. Yeah.
And I just wanted to bring Clara in, just because we mentioned Motel One, and you've just opened something. So just give us your impressions of how Motel One here in France compares with the other ones that you've, because mainly it's been Germany, Amsterdam. So how does the French market compare?
Well, we opened our first hotel here May last year, so it's been a bit over a year, and it's been going incredibly well. So obviously, getting more and more pressure to widen our net here. We have a bit of a more direct approach. We're actually extremely strong balance sheet wise, AAA rated, and we take direct leases, mostly fixed and term over leases. We have a good relationship also internationally, not here in France yet with Union, but building the net and becoming quite creative. The existing hotel we have here was actually built first by Asli and bought by Covivio. Was a very good relationship, which also we're looking to extend. But I must agree, even with one hotel open, it's getting easier. But still, the barriers of entry, sort of to really enter the market full scale, are quite high. But we're looking to extend our team here as well to really have people on the ground and really looking for new sites. So anybody who's looking for stable leases with very strong balance sheet to back them up, I'll be happy to welcome all ideas.
A couple of things that we haven't talked about, which were who is the sellers. Interesting, we were talking. I was doing an interview with Covivio, and they're obviously looking to also extend outside of France, especially, and build portfolios outside of there. Does that mean that some of the French players who are at the moment holding a lot of the assets in France are potentially going to be sellers because they're actually then looking to diversify? Are there more opportunities coming, Romain, or do you see it being pretty stable and remaining the same?
Yeah, hopefully Covivio will sell. They already sold a sub-portfolio of BNB at the beginning of this year. I know they are looking at their options with the rest. So yes, hopefully. But actually, if you look who owns leases in France, you have Covivio, you have a bit of BNP, you have a bit of AXA, and you have Atrim mostly. So this is a pretty limited number of owners. And I only see Covivio really trying to. Swiss Life has some also as well, but I only see Covivio really trying to go abroad at the moment. So I think they will divest a little bit. Hopefully, most of what they own. Yeah, Swiss Life is also investing. They raised 500 million equity just now, and they're willing to invest. But the thing is that they don't really own much actually in France. They have a few management leases, but they don't really have commercial leases in France. So it doesn't really help us, because if they go on the market with these, then you will have to sell vacant position or with the franchise, but you cannot sell with the lease, or that's going to be complicated. So the only ones that really own a lot of hotels under leases are Covivio, and yes, they are looking to invest abroad. So hopefully they will divest some of it.
Okay, good. And one of the other things we didn't talk about, but you introduced a little bit, Andreas, there was what are the sort of key trends, particularly in terms of investment between budget, or if we're calling that lifestyle, that's also fine, but between budget all the way up to luxury?
Well, we've got different funds, so therefore we would go for both full service and limited service. Particularly limited service are, for various reasons, are relatively attractive. We talked about that earlier. We would probably not so much go for real luxury hotel like Palace Hotel, as we regard the economics as a bit tougher. Also particularly in the downturn, may people trading down, and if we may look into a future crisis, you'll be probably much better set up, particularly with budget and limited serviced hotels with relatively high GOP percentages, So that'll be definitely the play. It has been the trend for many, many years now, but it's still not been ending. There are some countries with still lacking of new supply in the budget sector, in the economy sector. For instance, if you're looking at Spain, there is a very few budgeted and branded hotels. So there'll be another market where you may have a look at. Maybe one other topic is I would like to mention finally is that if you're looking at the different brands, I think, for instance, Accor did it very well as they were acquiring many hotel companies. That's, I think, basically in order to serve all different clienteles and also modern clienteles. Like they acquired also 25 hours. Or at least are participating in 25 hours. They're looking like a Joe Mana Shelter. I think that's actually very, very smart and clever way in order to really cover the entirety. And we also, in the preparation for this panel, we talked about the point that, is there a consolidation to be seen in the future? And I would say, as we saw last time, yes, there will be probably a consolidation, but for the time being, I think it's a very, very clever move in order to be covering different clienteles, to reach out and see what are the trends. Also, young people, what are they looking for? Asli has touched base on that. To be at the pulse and being here with the trend. Yeah.
Okay, good. So 30 seconds each, so that we'll all have been finished in 2 minutes, and then people can enjoy the buffet, which will be next door. So there is food served for you afterwards as well while you're networking. Where should these good people invest? You can choose France or Europe or globally, should you wish. Where should they invest? What in and why? But you've only got 30 seconds. Romain?
It's not an easy one. But I would definitely look at regional France. I think the yields are pretty high. We're struggling selling portfolios at the moment because not enough people are looking. So you can enjoy 10% plus yields in secondary cities, 7-8% yields in, let's say, regional cities. So that's definitely where I would put my money.
Okay, good. Asli?
Wherever we are, we should invest there.
Okay.
No, I think the next big thing is that to be able to cater for Chinese and Indian customers and where you can make them stay outside the cities. I think we had an earlier on conversation with the Louvre Hotel, a huge market there, I think, and all the secondary cities in Europe that has a good accessibility with buses, that should invest.
Okay. Alexandre?
I think there are opportunities for portfolio deals, and for those investors who are dependent on yield and also on size at some point. I think there are opportunities on the market now of a fairly large number of smaller hotels, which together will form a cluster or a sizable portfolio.
Yeah, maybe quickly threefold. As I mentioned prior, secondary cities is the play. Either it'll be in France, as we understand, but also in Germany. Germany has very economic strong secondary cities. If you want to expand into Germany as an operator and have not hotelier, to start in Berlin and Hamburg, it's a tough plan. So maybe you go to secondary cities there like Heidelberg or Hanover. There are some smart moves you could do there. On the other hand, portfolios would be, as I do agree with Alexandre, we would be having a strong interest in portfolios. We would be even able to create a shelf portfolio, or really create a fund portfolio. We already have been successfully realizing that on the office sector, where we have firstly identified an investment opportunities and then have been creating a fund. So if you have an idea from up 200 million upwards, please approach me and we can talk about how we could structure a deal and getting the investors at the same time into one of these vehicles. I think that'll be also one of the new creative things we're having at the moment at Uninvestment.
Great, thank you.